Traders, Anthony here. If you go through my ideas, I've been posting an update on everything, and yeah, we've got a pretty good win rate going on here. This was my last Bitcoin idea down here, and over here we've got the chart that I posted in this video back over in here on April the 4th. So that's traded really well, and I mean, if you jumped in here when this video was posted, and you're still following this, if you're pulling your stop loss up behind it, kudos to you, well done. So what I want to do with this video is we'll have a look and see what we've got here, and I'll give you my take on we'll look at another idea. So if we go out to the daily, just want to get a bigger perspective. I'll just clear the decks here, remove everything. All right, I got a very simple strategy, and I follow it to the T. I'm a trend continuation trader. This is trending up. This rally, this move here, that was targeting liquidity above these highs. In other words, buy stops resting up in here prior to this sell is a target for big money. And I mean, they accumulate down here, right? They unload up here, and you can see that it's spiked through, and now we've got this red candle. Now, the next draw on liquidity, if this is going to remain bullish, and I am bullish, I was thinking 80,000 would be a potential target heading into the halving, Bitcoin halving, and look, that may or may not play out. It's we've still got over a week to go, about a week or so. So I'm thinking these highs here would be a target at least. Now that's my next port of call. The liquidity resting above here, that's the draw for smart money to accumulate down in here and hit this level. And I mean, we've got these price swings, low to high, swing low. Wow, it's not really, these are daily candles, but have a look at it on the 4 hour, and I think we'll get a better picture in terms of these swings. Anyway, my bias is long, and I'm looking for an entry point. Let's just go down to the 4H, and I really think that into the halving, we're going to get a lot of interest, and there's a couple of targets here. I've got a feeling that after the halving, we could see it. We could see it sell off. So, I mean, we've got all-time highs sitting here, and it wouldn't surprise me that we get look at this price swing. Okay, swing. Well, I mean, even from back here, swing low, swing high. You pull these price swings, and we have a bit of a pattern. Pretty much. All right, that makes sense, right? Even 75, 76, I mean, I think I'd even project it up to here. But I think at some stage this trend is going to roll over. So, and I really think this is being priced into the halving. Anyway, it all remains to be seen, but I'm definitely bullish now. If we follow this, and I'm going to make this video suitable for everyone. I mentioned this in the last video. If you're an advanced trader, intermediate, it's for you. And if you're a beginner, I'm going to try to clarify some of the concepts so you understand a bit of technical analysis and my thought process here. I'm a trend continuation trader, and this is an entry point for me right here. All right, we look at this swing low, swing high, retrace into around 50% of every price swing. So you want to get in at a discount, and the discount is, if you pull this Fibonacci low to high, is under this 50. 50% of this price swing is my threshold. So you want to buy at a discount. This is a buy right here. I'm in, long, market. Let's go. And now my stop under the previous low. Understand the risk. Look, there's a target up around 70. See this projected 100 up here? I'll set that up as a target. That's a 3.79R. Now, here's the thing. If you would have done this, you follow this strategy, every pullback, so look at this pullback, swing low, swing high, retrace 50% between the 50 and 618 fib, stop loss under the previous low. Well, look where we've already traded. This 3.9R. Let's follow this. See, this is a strategy. This is a trading plan that you can follow. Here's the next pullback. What are we looking for? We're looking for swing low, swing high, pullback 50% to 61.8. There's my entry point there. And, okay, I'm going somewhere with this. Stop under the previous low. Look at this target. Okay, that's reached 2.8 already. Again, copy and paste that. The next pullback, where was it? So we had swing, retrace. Oh, well, we'll just go up in here. There's a... Let me just get rid of this. And then we're going to go down to the... no, we're not. I was going to go down to a lower time frame, but we don't have to. Oh, we can. We'll go down to a 15-minute chart, and I'm going to show you how you can refine this entry point. But before we do, have a look at this. Look, this low here, this red candle, swing low, swing high, retrace. There's another entry point, possibly, if you caught it, right there. Stop under the low, and this strategy will build an account. But at some stage, you have to understand that that will happen. And, pay attention to these levels. This is slightly under my projected 50. It could it could retrace. It could do it here. That could be where we roll over. And you get stopped out at some stage. But if you follow this strategy, 1, 2, 3, you got three trades in here in profit, and at some stage at the end of the trend, you're going to lose one, and that's part of the cost of doing business, basically. Anyway, I hope that's clear. That's especially for newbies who are trading, and you're really struggling with your trading plan. That's a plan. And the other thing you want to do is see these stops here, this stop loss range. Keep your position size consistent. So if you're risking $100, do that on every trade. Don't vary your lot sizes. Don't risk 500 on this one and risk 50 on that one. Risk the same on every trade, and then you can measure your success. And you know that you're risking 100 to make 300. You're risking 100 to make 3. You're risking 100 to make 3. You're risking 100. If you lose one, well, you've made, you know what I mean? Like, you can measure your success really well. That's how you manage your risk. Anyway, going on a bit of a ramble here, but now this is dropping down a little further. I'll go down to a 15-minute chart, and I'll give you a way to get involved with this. A couple of things you want to notice whenever you see a price swing is this. Let's just take that out. See this thin candle here. This is an imbalance. Imbalance as in this range is a balance area insofar as there's more or less, to a degree, equal number of buying and selling. When it pushes out bullish, there's an imbalance. It's buy-side imbalance. Okay, this is a bullish imbalance. The market's looking for two things: one, liquidity, and number two, to rebalance. So this retrace rebalances as it pulls back down into this balance area. Hope that makes sense. So always look and see where there's a thin candle, and understand that this could pull back down looking to rebalance. Fine. Now, it's a pretty strong pullback, so you want to be a little bit careful with this. You might want to widen your stop in case at some stage they'll look to hit these lows. The trend will trend up, and then occasionally they'll drop it back quite a distance and take out these lows, and then they're off again. So you just got to wiggle your stop loss around and try and work it out. But maybe go for a wider stop on that. And that's a 2.8R. Well, if we go for 75.6, something like that target. What else can I say about this? We've got the retrace. That's my my strategy there. It's come back down into the 61,786. Now, here's the thing. If you're not sure how to get involved and you don't want to set a limit buy, go down to the lower time frame, 15-minute chart, even a 5-minute, all right? And here's what you want to look for. See how this is trending down? Well, it's kind of hitting these lows with a vengeance. But what you'll find is this is trending on a 15-minute. And it's coming down into your target area. 61,8786, the fib zone here. Just get rid of that. What you want to do at this point, if you're in front of your chart, is watch this, because what we've got here is a trend. Lower highs, lower lows, and at some stage, whether it's here, okay, at some stage, it's going to rotate. And we're going to get that. Now, whether it's here or it's down further, it remains to be seen. But what you can do, again, if you're in front of your chart, is sit here and watch and wait for when this does start to range sideways a little bit, and you want to wait for the break of market structure. In other words, this trend is cracked, okay? We get a break of market structure when these highs, and potentially this high here, gets taken out, and then we retrace back down to retest the range, the lows. All right, have a look at that. Okay, so this is a way that you can get involved. Wait for price action to form a base. Break of market structure. This is a bit early. This one here. This would be a change in character. Okay, so this is a shift in the trend here. Chalk. Well, we'll just call it that. So wait for that. And that's a bit early. The next one would be a break of market. Well, when this break here is taken out, this high I should say, you know, you could call that a break of market structure there, boss. Let's just do this, something like that. When these highs here get taken out, bang, chalk. Okay, we might see if bigger players are going to go long, they will most likely set up a range in here, and then they're going to hit liquidity both sides. This would be a stop run. So see if you get a double bottom or a triple bottom, whether it's here or wherever it is, a double bottom, and I call it the fakey shaky chart pattern. This is your fake out, and it draws buyers in. More stop losses go under, so they build liquidity under, and then we get this stop run, and they hit liquidity under here. And then we get the move, right? So then you go for the breaker structure, and this is going to be your entry point. So this price action is the chart pattern you want to. It's called the fakey shaky chart pattern, and it trumps the head and shoulders and triangles and whatever else there is out there. Okay, it's the fakey shaky, and fake out, shake out, and away we go. So wait for that if you don't want to set a limit buy. So guys, look, it's a bit long-winded, but I hope I've covered everything. And yeah, I'd love to hear your comments. Give me some ideas down there in the comments section. With that, I hope you have a great day. Oh, before we go, if this doesn't set up, there's no trade. If this is still trending down, there's no buy opportunity. Until you see this, okay, then that's the opportunity, all right? So null and void if this continues bearish, this 15-minute chart. And until it shifts gears, that's the moment. Okay, with that, hope you have a great day. Safe trading. See you in the next one.